Well, on Thursday, December 18th, the markets got a pretty serious case of the jitters, especially over in the tech sector. So what's really behind all this? Let's break down all the forces that are driving today's sentiment.
It was a really tough session on Wall Street. Just a sea of red right across the board. The Nasdaq took the biggest hit by far, and that's the real key to understanding today's story.
Hello, and welcome to AI Market News by LMM. We're here to unpack the key stories shaping the financial world, and believe me, today's big story is all about a potential crack in the very foundation of the AI boom.
So here's our roadmap for today. We're going to start with that market snapshot, then dive right into the main event, this growing anxiety in the AI trade. From there, we'll connect it to what the central banks are doing, see how it's hitting currencies, and then we'll look ahead at what's on the economic radar.
Okay, so starting with our market snapshot, the story of the day was a pretty significant pullback in US equities. It feels like the optimism we've been seeing for a while just hit a major speed bump.
And here we can really see the scale of that sell-off. The tech-heavy Nasdaq absolutely led the way down, dropping a sharp 1.81%. The S&P 500 followed suit, while the Dow got away with a more modest decline. This tech-led downturn is really central to everything that happened in the market today.
Which brings us to our main story, a wave of anxiety that is just rippling through the AI trade. After a year of incredible hype, investors are finally starting to ask some really tough questions about the massive costs of actually building out the AI revolution.
So, what's really behind these jitters? It's not about a lack of demand for AI itself, not at all. It's actually about the immense, almost astronomical cost of the physical infrastructure needed to power it all.
We are talking about these gigantic data centers. The sheer scale of the construction and the investment required is just breathtaking. And because of that, real concerns are starting to grow about how all of this gets financed and, ultimately paid for.
Now, the specific trigger for today's sell-off, based on various news commentary, was a report that Blue Owl, a really key financing partner, backed out of a significant data center project with Oracle up in Michigan. That single piece of news sent shivers all across the market, and it raised some serious fears about the stability of the financing behind this whole AI build-out.
And this leads to a figure that came out in Oracle's financial filings, a number that analysts are calling a bombshell: $248 billion. That's their future lease commitment for data centers. It's a staggering figure that just perfectly quantifies the enormous financial exposure these companies are taking on. So the crucial point here is this financial mismatch. Companies are locking themselves into these incredibly long-term lease commitments. We're talking 15 to 19 years. But their client contracts, even with giants like OpenAI, they're much shorter, maybe around 5 years. This creates a fundamental risk, a huge question. Will the revenue from end users over the long run actually be enough to justify these decades-long costs?
Okay, now let's see how this all fits into the wider macroeconomic picture. This anxiety in tech is happening at a time when central banks are basically signaling that they are in no rush to provide any relief through rate cuts. We got a very clear message from Fed Governor Chris Waller, who said, and I quote, "The Fed is in no hurry to continue easing into 2026. This just reinforces the idea that the era of easy money that fueled so much growth is firmly on hold, which makes those massive financing needs for AI even more of a challenge.
And here's a quick look at where the major central banks stand. The Fed is holding at 3.75%, the ECB at 2.15%, and the Bank of England at a firm 4%. The clear message from all of them is one of patience and caution, and that keeps borrowing costs elevated all around the globe.
Naturally, these major themes, the tech anxiety and the cautious central banks, they're having a direct impact on the foreign exchange markets. So let's see how this is all playing out.
The USD/JPY pair, which is trading around 155.64, is a perfect example. The Fed's patient stance is keeping the US dollar relatively strong. Meanwhile, all eyes are on the Bank of Japan's decision tomorrow. There's growing speculation that they might finally move to hike interest rates, which could seriously strengthen the yen.
Taking a look at Oanda's order book for USD/JPY gives us this fascinating glimpse into trader psychology. It literally shows us where traders are placing their bets. We can see this wall of sell orders sitting just above the current price, acting like a ceiling, and then a floor of buy orders just below. This is basically a map of market sentiment, and it shows us where the big moves could happen right ahead of that BOJ decision.
All right, finally, let's pivot and look at the week ahead.
What are the key economic data points that we should all be watching? Looking at the calendar with some info from investing.com, today's data really paints a mixed but telling picture. Jobless claims came in at 224,000, the Philly Fed index showed some slight expansion at 2.5, and year-over-year CPI still holding at a persistent 3.1%. All of this just confirms the Fed's cautious stance. But the main event is still to come, the Bank of Japan's interest rate decision tomorrow. That could be a major market catalyst.
So, to sum up today's whole explainer, the market is really being driven by jitters in the AI trade over these massive infrastructure costs. This is all being compounded by central banks holding firm on interest rates, and looking ahead, the Bank of Japan's decision is the next critical event on the horizon. And this leaves us with a really critical question. With the high-flying AI story facing its first real test and central banks offering no immediate relief, where is the market going to find its next positive catalyst for growth?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe for more market insights. We'll see you next time.